All right, we're going to talk about why I love syndicated investments and really what is syndication and how, when you're getting started, what are some things to look for and things to look out for. Okay, so let's jump in here. So really, real estate syndication, it basically involves pooling together investments from different investors to go buy a larger asset. There's a lot of reasons for doing this. I'm going to get into different parties involved and why it is. But really the biggest challenge, I was working in single family investing. Some of you may be able to relate to this. And I undervalued my time, right? I was making okay money, but it was taking a lot of time and it was not scalable. And I was making in my job, it was $100 an hour, over $100, maybe $200 an hour in my job. And so for me to go do that, I wasn't taking into account how much time I was spending on this. And you might say, well, I love doing it, whatever. Well, if you can't scale it, if you got 3 or 4 rental houses like I did, and you can't go immediately to 30 or 40, which, then you're not being passive. You're not actually passive investing. And so one of the biggest mistakes we can make really is undervaluing our time. So what I encourage you to do is do a time audit. Take your schedule, put it into AI, ChatGPT, find out what, get an app on your phone, figure out how you're spending your time, because it will be very interesting to see the ways that you're being limited. So we're gonna jump into this, some really cool ideas about syndication and why I think it's a great idea for especially high net worth individuals. And I'm gonna share a great quote for you at the end, so let's jump in. All right, so welcome. My name is Bronson Hill. I'm the CEO of Bronson Equity. We do projects like this behind me. We're also doing oil and gas and businesses and other things that provide cash flow, appreciation, or tax benefits for investors just like you. This is just educational. We're not providing any specific advice for you. So what is syndication? So a syndication involves, you have 2 parties. You've got a general partner and a limited partner. A general partner could be a team of people, it could be one person, and they're basically operating a deal. The limited partners are the ones that are actually putting resources into it, typically putting capital. General partners typically do as well. But what will happen is there'll be a split between the general partners and the limited partners, so that when this deal starts making money, you actually can become a passive investor, right? So when it says limited partner, doesn't mean you're limited in ownership, it just means limited in responsibility, right? You're not actually dealing with the issues as they come up on the property. You're trusting this general partner team to be ones that are actually going to deal with the issues that come up. So it allows you to really acquire more profitable assets, to be able to diversify, to be able to be a passive investor. It's very, very attractive. So the benefit really to investors is, again, it can help you reduce risk. It can help you to be, to really have time freedom for yourself. And that's really one of the biggest challenges, right? We talked about that people will think, hey, I'm a passive investor. I own 10 rental houses. And I said, well, how much time does that take you? Well, it actually takes a fair amount of time. Even though I'm not the property manager, even though I'm not looking after it, I still am getting calls, and the tenant didn't do this, or the tenant broke this, or this issue is happening with the house, we need this repair. And some things don't always work the way that they should. And so when you get to larger assets, they tend to be much more institutional, or larger assets where you can really predict what's going to happen as far as cash flow and things like that. So the other thing really is looking at your experience. So, just the successes that we've had in syndication, and not everything has gone perfectly. We've had some serious challenges in a couple deals, but all of it's learning, right? We always learn as we go along. We learn the things that are going, and now we're seeing, the opportunities that are available particularly right now in multifamily. Warren Buffett has that quote, and he says, "Be greedy when others are fearful." So, we've seen some of these assets decrease now 20 to 40% from where they were 3 or 4 years ago. Right? So if that's the case, there's some opportunity to be able to buy and be able to go get other assets and stuff. So one big mistake that I see a lot of people make when it comes to investing or getting started is this: they don't get started, right? There's this analysis paralysis. We look at a deal, we look at a couple deals, we think, I don't know what I should do. A good way to get through that is to maybe find a friend who's been doing this for a while, go to meetups, go to a conference. One of the most transformational relationships a lot of passive investors will say that they have is other passive investors. And that's the only person that's really not biased, not trying to sell you anything. Now, we love doing our deals, want everybody to do our deals, but we're still biased, right? We have a bias versus another passive investor does not have that bias. And we just recently launched a mastermind group called the Wealth Forum, which is a small handful of high net worth passive investors, 2 to 10 million or higher in net worth. And they just get together and talk. We all talk about different deals we're doing, things that worked with these guys for 10 years. They're amazing. I would avoid these guys over here. And it's a great way. If you want to really shortcut your success, you get around other passive investors, create those transformational relationships. It can be super powerful for you. So, I want to share that with you. I want to share this quote for you right here. Henry Ford says this. He says, "Coming together is a beginning, keeping together is a process, working together is success." So that's what happens in syndication, right? We're working together. I'm a passive investor. We're also general partners. We're doing a lot of different things in different places, and it really is a great way to be able to do more than we could do on our own, right? And one of my goals, really, as somebody who's a fund manager, is I want to own everything and operate nothing. That's actually an aspiration of mine. So I can travel, so I can create, I can write a book, I can do the things that I want to do that are important to me, because it's really developing more of that time freedom. Really, people say, I want financial freedom, but it's really all about time freedom, right? How are you developing your time freedom? And if you just find more to do and more things to do, then you're not really becoming more free, in my opinion. So if you want to check out this video on tax strategy, I think tax strategy ties in with this as well. There's a lot of reasons why people do syndications. They want to reduce taxes. I have a chapter in my book about this, about reducing your taxes potentially to zero. I went from a 25% taxable rate to about 1%. And so you can check out that video up here. And then if you haven't read my book, Fire Yourself, it's also behind me right here. And it's basically just a lot of these strategies I'm talking about here. Would love for you to share it. It's become an Amazon bestseller. But I appreciate you taking the time to educate yourself. Would love to see in the video what it is you've gotten out of syndication, what it is you're trying to work for yourself. And thank you for taking the time to educate yourself. Look forward to seeing you on the next video.